Swayam Prabha. Digital India. Educated India.
My work greetings to all of you. Once again, I welcome you all. This is lecture number 8. Dear students, I am Dr. Raju Maji, Assistant Professor, Faculty of Law, Banaras Hindu University. Under this lecture 8, I have covered the very important segments of the Law, Banking and Negotiable Instruments Act. This particular lecture is based on the power and functions of the Reserve Bank of India. As we have already discussed in the earlier lecture, the powers and functions of the Reserve Bank of India under the Reserve Bank of India Act 1934. But this lecture is purely based on, or you can say it is based on the powers and functions which is conferred to the Reserve Bank of India under the Banking Regulations Act of 1949. As you know that the Reserve Bank is acting as a banker's bank, as you know that the Reserve Bank is acting as a government's bank, and not only that, the Reserve Bank is also having that power to accept deposits without interest from anyone. So, in that way, we know that the Reserve Bank itself playing a very important role for the monetary stability of this country, as we have already discussed under the Reserve Bank of India Act. That is, the power and functions, very limited power and functions has been granted under the Reserve Bank of India. But as we have discussed earlier also, that the Reserve Bank is guardian of the monetary stability of this country. So, every institution, they require some sort of the powers, and particularly when we are talking about the banking sector, it was regulated by the Reserve Bank of India in our country. As we know, the Reserve Bank was established with the aim that having a central bank in India, so Reserve Bank was established with that objective. So, dear students, this lecture which I have decided to give, I have taken some of the very important sections, and these sections I will deal one by one. Now, the reason behind it, because when we will see that the Banking Regulations Act itself is a big one, and the powers which has been conferred, to the Reserve Bank of India to maintain, or you can say to regulate not only the banking sector, but the other banking like this, the non-banking sectors, the cooperative banks, the financial institutions, each and every powers has been conferred under this act. So, this act plays a very significant role as far as concerned to monitor, to control, to regulate the banking system in our country, and that is done by the Reserve Bank of India. So, naturally, this act meant to confer power to the Reserve Bank of India, so that the Reserve Bank of India is enough competent to monitor, to regulate the banking system, the financial systems of this country. Now, with this, when we are looking towards that the banking sector, particularly when we are talking about the commercial bank, either it is run by the government, or it is run by, we can say, the private agencies or the private company, whatever may be, they are immaterial. What is the material? That in a similar way, in the same matter, in the same way that the Reserve Bank of India is having or exercising power which is conferred under this act. Before discussing the powers which is given to the Reserve Bank of India, again one thing which I would like to mention before you, that is, if we talk about as far as the establishment of banking business in our country, then we can say that any banking institutions or the banking company that born with the Reserve Bank of India and it ended with the Reserve Bank of India, meaning thereby that each and every power is conferred under the Banking Regulations Act to the Reserve Bank of India. Not only that the establishment, but as far as concerned that whenever the bank is find that the certain management is not in a position to performing according to their objective, then the power has been conferred to the Reserve Bank of India that they can issue the directions from time to time to regulate such kind of activities. that is not sufficient. The Act aims that even in the management, if we found that the management is working derogatory in the public interest or in the banking policy, at that time the Reserve Bank has a power that he can direct intervene in the management, and he can appoint the chairperson, he can appoint the additional director over the management who will take care of every kind of, you can say, the activities of the any banking company. So there we can say the direct. At the same time, as you know, that how the bank or the Reserve Bank can ensure that the activities of any bank is in contrary, or you can say derogatory with the objective of any banking company. So for that purpose, the Act empowers the Reserve Bank of India for scrutiny, for inspection that is there, and at the same time that the Reserve Bank has conferred power to ensure the information, to get the information from each and every banking company from time to time, through which that the Reserve Bank can ensure that the bank is working in the right way or in a proper way. Not only that, when we will see that some of the power switch, particularly I would like to mention before you, that is the section 22. The section 22 is the power which is conferred to the Reserve Bank of India, that without taking prior license or obtaining a license from the Reserve Bank of India, no banking company can commence the banking business in India. That's very important. That means the Act says that if any company, if they are willing to start the banking business or they are willing to commence the banking business in India, then first and foremost thing, what is the requirement, that they'll have to obtain a license. When he is granting the license, then actually the Reserve Bank is satisfying himself that the company has the sufficient means to meet out the needs or meet out the demands of the banking company, which will arise to run the banking business in India. In the same kind of, you can say, the power has been conferred to the Reserve Bank of India. If any the company, those who are, we can say, the foreign companies, means the companies those who are, we can say that they are incorporated outside India, and if they are willing to commence their business or they are willing to run their business in India, they will have to take license from the Reserve Bank of India. Now, very beautifully, that once you have obtained the license, it is not sufficient that you can do as you wish to, or you can say that you can expand your business. It is not like this. The Reserve Bank, under section 23, the provisions have been made that if you wish to expand your business, even in a very limited sense, we can say that even you cannot open any branch in the other part, only with the certain circumstances, or you can say subject to the limitations that can be done within a locality. Apart from that, the no banking company can expand their business. If they wish to expand their business, they'll have to take prior permission from the Reserve Bank of India. That means that neither you can start or run your business, banking business in India, or you can expand your business. So for the extending, you need a permission, and as one person to commence or to start banking business in India, you'll have to take license, you'll have to obtain license from the Reserve Bank of India. Now, the powers and functions of the Reserve Bank of India under the Banking Regulations Act 1949, as I have told you that this is the sole act as one person to monitor the banking affairs, or to monitor the financial institutions affairs, or to monitor the any other, you can say, the indigenous banks and the cooperative banks, or any financial institutions that is monitored through the Reserve Bank of by the Reserve Bank of India with the help of Banking Regulations Act 1949. So the Banking Regulations Act 1949 empowers the Reserve Bank of India to control banking institutions of India. Some of them we are discussing, as initially as I have told you that I will not touch as my concern the part of the cooperative societies, or you can say the cooperative bank. I will not take the financial institutions. I will take only how the commercial bank, those who are doing their business in India, how they can do and how it is regulated by the Reserve Bank of India. The power of Reserve Bank of India to appoint the chairman of a banking company, as I have told you that every company, they are doing their manners, or they are regulating, or they are maintaining their every kind of, you can say, the activities, or the policy making, the decisions it is taken by their board of directors. So, similarly, the banking company has its own board of directors, and they are taking that how this company will run, what are their objectives, they will determine the features perspective of that company. So, it is very important if the anyhow by exercising the power under section 35 that during the scrutiny if the Reserve Bank find himself or by the central government issued some sort of directions for a particular company that to investigate or inquire, in that circumstances if it will come that there is certain wrong things is going on or the management is working detrimental to the interest of the depositors or the management is working detrimental or against the interest of the banking policy, in such a circumstances that the Reserve Bank will intervene and he can appoint a chairman or additional director. So, that power has been conferred under section 10BB of the Banking Regulations Act. It empowers the Reserve Bank of India to appoint chairman of a banking company where the office of the chairman of the board of directors appointed on a whole time basis or a managing director of a banking company is vacant. The Reserve Bank of India may, if it is of opinion that the continuation of such vacancy is likely to adversely affect the interest of the banking company, appoint a person who has a special knowledge and practical experience of the working of banking company or a state bank of India or any subsidiary bank or a financial institution or financial, economic or business administration to be so appointed to be the chairman of the board of directors who is appointed on a whole time basis or a managing director of the banking company, and where the person so appointed is not a director of such banking company, he shall, so long as he holds the office of the chairman of the board of directors who is appointed on the whole time basis or a managing director, to be deemed to be a director of the banking company. So, that is section 10BB, it is a very important section. As I have told you, whenever the bank satisfies himself that a particular banking company, his activities is detrimental or against the objective of that particular company, and that is influenced by, or if there are certain vacancies, in such a circumstances the section 10BB capital B, which empowered the Reserve Bank of India to appoint a chairman or a managing director. There is the minimum paid up capital and reserves is required under as far as every banking company. So, the section 11 of the Act, it imposes every banking company should deposit the prescribed minimum paid up capital and reserves with the Reserve Bank of India, either in cash or in the form of unencumbered approved securities or partly in form of such securities within the prescribed time prescribed in this section. So, that the section 11 also plays a very significant role, which conferred the power to the Reserve Bank of India that the minimum, you can say, the paid up capitals and reserves is necessary to maintain or to keep with the Reserve Bank of India. Now, as far as concerned the cash reserve, that is very important to see that to discharge the monetary stability. As we have earlier discussed also, that there is only one act which will have as far as concerned which will protect some kind of, you can say, the interest, that is the Securities Depositories Act, which is, we can understand that only the 5 lakh rupees of any customers is safe, and the other way we can say the status of a customer with the banker, its status is, although the creditor, but the status is not secured creditor, it is unsecured creditor. Being an unsecured creditor, we know that how their rights can be redressed, but for that purpose to make, or you can say to ensure the banking, the conditions, it is very important, and that provisions has been made under section 18 of the Act. Section 18 of the Banking Regulations Act says that every banking company not being a scheduled bank shall maintain in India by way of cash reserves with itself or by a balance in a current account with the Reserve Bank of India or by way of net balance in current accounts or in one or more of the aforesaid ways a sum equivalent to at least 3% of the total of its demand and time liabilities in India as on the last Friday of the second preceding fortnight, and shall submit to the Reserve Bank of India before the 20th day of every month a return showing the amount so held on alternate Fridays during the month with the particulars of its demand and time liabilities in India on such Fridays, or if any such Friday is public holiday under the Negotiable Instruments Act 1881 at the close of the business on the preceding working day. So, it is a very important provision as far as to maintaining the reserve. The case which is required that whatever may be the time and demand liabilities accrue by any bank, then the time and demand liabilities means the money which the banker is receiving from the public, and it has to return whenever the customers demand. So, that is why it is called the time and demand liabilities, and the time and demand liabilities we cannot say that when the customers will demand. At any time the demand can be made by the customers, and it is the duty, as we have already discussed under section 31 of the Negotiable Instruments Act, that every banking company they are responsible or they are liable to return the customers money on the basis of the section 31 of the Negotiable Instruments Act. So, it ensures that the Reserve Bank must keep some sort of the reserves of every banking company, that is 3% of the time and demand liability, so that it can be ensured that the depositors' monies are not at risk and their money are safe. Further, the Reserve Bank control over the banking companies. How the Reserve Bank is control over the banking companies? As I have told you from the its inception, any banking company, as I have told you, that it cannot commence the banking business. If they wish to commence the banking business, or they willing to run a banking business in the country, but then they will have to obtain a license from the Reserve Bank of India. And it is not very easy to get a license from the Reserve Bank of India. The Reserve Bank will satisfy the certain responsibilities on the basis of that can be. So, the another section which is talking was section 12A of the Act. It is talking about the Reserve Bank of India may by order require any banking company to call a general meeting of the shareholders of the company within such time, not less than 2 months from the date of the order, as may be specified in the order, or within such further time as Reserve Bank of India may allow this behalf, to elect in accordance with the voting rights permissible under this Act fresh directors, and the banking company shall be bound to comply with that order. It's like the previous sections which we have seen under section 10 BB, the same kind of powers has been conferred under section 12A. At any time, as I have told you, under section 35 of the Act, the Reserve Bank has a power that he can scrutinize, or he can conduct the inspections of the accounts, the books of any banking company, and he find that the banking company, the affairs is little bit, or there you can say the working conditions is little bit detrimental to either the interest of the depositors, or you can say it is against the banking policy of this country. So, under section 12A of the Act, the Reserve Bank of India may by order require any banking company to call a general meeting of the shareholders of the company within such time, not less than 2 months from the date of the order, as may be specified in the order, or within such further times as the Reserve Bank of India may allow this behalf, to elect in accordance with the voting rights permissible under this Act fresh directors, and the banking company shall be bound to comply with the order. That means under section 12A, the Reserve Bank can issue an order as far as concerned to conduct a meeting of the shareholders, and that order has to be complied by any banking company under section 12A of the Act. Another sections which is very vital as far as concerned to regulate the banking affairs in this country. So, that power has been conferred to the Reserve Bank of India under section 21. So, power of the Reserve Bank of India to control advances by banking companies. Sometimes we are facing that or we are experiencing that if there is a very strong law as far as the provisions which is made, apart from that we are facing that some of the persons, they are getting advances from the bankers and they are leaving our country. So how it happens, and we know that the bankers do not have their own money, it's the public money. So the public money, what is the required, because the bankers' responsibility is to return that money. So how it can be returned, where the banker takes some sort of the security. So hedge fund concerned to investigate all the things, that how, in what manner or to whom the bank is granting advances. Provisions is very strong provisions has been made, or you can say the powers has been conferred under the Banking Regulations Act to the Reserve Bank of India. Besides that, there are certain things which is happening. It is very miracle. Sometimes we find that having a very, you can say, the important provisions, or you can say the very strong act as far as concerned to regulate the every aspects of the, or you can say the every affairs of the banking company. Besides that, how the things are taking place, it's a question mark. But I'm coming to that, the power of the Reserve Bank of India to control advances by banking companies. As we know that the one of the important functions of the banking, that to grant advances or to invest money as you wish, but as far as concerned that the maximum money it is investing with the means of by applying, that is to grant or lend money to the public. So according to section 21 of the Act, the Reserve Bank of India may determine the policy in relation to advances to be followed by banking company generally or by any banking company in particular, and when the policy has been so determined, all banking companies or the banking company concerned, as the case may be, shall be bound to follow the policy as so determined. As far as concerned, that it's a very important sections to regulate the banking affairs of this country, and that power has been conferred, and it is very clearly mentioned as the public money is there. The bank doesn't have its money. So, but that power has been conferred, or you can say that is the banker's right is that he has a, whenever he accepts the deposits from the public, he will treat that money as his own money. And being a own money, that the power has been conferred, that the banking business means he has to invest that money, he has to lend that money. So when he is granting the advance, so the questions before us, that how he is ensuring the return of that money, how is ensuring that the repayable of that money. If someone is not back or repay that money, then how it can be, you can say the burden which will arise, how that burden will be met out. So for that purpose, whether the bank has taken proper securities in respect of advances, that is the question mark. And there is a strongly provisions that the banker has to do that. And for that purpose, the Reserve Bank has a power that he can issue a directions to any banking company as fine concern whenever the banking company is granting an advance to someone, then how that can be ensured, what are the regulations, the guidelines, what kind of the security can be taken by the banking company as fine concern to granting advances. In this relations or in this regard, you can say the power has been conferred under section 21 of the Act of the Reserve Bank. Under this Act, Section 21, the Reserve Bank of India may determine the policy in relation to advances to be followed by the banking company generally. That might be for the purpose of the general for every banking company, or there may be, if the Reserve Bank find that the certain banking companies, they are not following, or there is a need that to give the extra, you can say that the restrictions or the limitations, that can be done. So that's why it is talking about whether the policy will be making under exercising the power section under the section 21 of the Banking Regulations Act. That can be done how? The generally policy can be made, or you can say the guidelines can be made for a particular banking company, that can be done by the Reserve Bank of India, and the Reserve Bank of India is empowered under section 21 of the Banking Regulations Act. Now, this is the things which I have already discussed with you. It's a very important sections, that is section 22. Section 22 is talking about that to grant the license, and as I have mentioned earlier, that without obtaining a license from the Reserve Bank of India, none of the company can commence their banking business in our country, whether it is incorporated in India or it is incorporated outside India. there are certain things which has to be satisfied. The first thing is that the liability which arise by taking money from the public, and naturally the Reserve Bank, when any company they are filing for getting or for obtaining a license from the Reserve Bank of India, the Reserve Bank will satisfy all these things. The first thing he will satisfy that how the company will functions, what is the prospectus, how much the capital he has, what is the infrastructure he has. All things will be certified on the basis of what, that the company is in a position to discharge his liability which will arise when he will commence the banking business. These are very important things. And the second thing is that the company who is willing to commence the banking business in country, whether it is benefited to the country or not, that is also very important. Whether he will meet out the need of the society as well as the need of the nations, whether in their objective they have mentioned it or not, that will be taken into consideration. The third very important thing, that he will ensure that what kind of the affairs, what are the activities, what kind of the things they have mentioned in their policy documents, like the memorandum of association, article of association, what is their objective, how they wish to run their business, whether that the affairs which they have set in their objective, whether that is detrimental to the interest of the nation, whether that is detrimental to the or against the interest of the depositors, everything, all the things will be taken into consideration. And not only that, you will see that what is the prosperity, how the company, whether what is the objective they have set, whether it is in the right directions or it is the wrong directions. And the right directions means whether the company in a position to meet out the need of the we can say that the liability which will arise, that is very important. So, the section 22, as I have told you, under this act the power has been conferred to the Reserve Bank of India to grant a license to the any banking company, those who are willing to commence the banking business in India. As per section 22 of the Act, no company shall carry on banking business in India unless it holds a license issued in that behalf by the Reserve Bank of India, and any such license may be issued subject to such conditions as the Reserve Bank of India may think fit to impose. So, the general conditions which I have told you. Apart from that, the conditions which have been laid down under this, that is, as I have told you, that the affairs of the company, the capital structure, infrastructure, that their working nature, the activities of the management, that will be determined, and particularly that by going through that, whether it will be satisfied by the Reserve Bank of India itself, that whether what is the future perspective of that particular company, whether in the near future he is in a position to discharge his liability or not, which will arise due to getting the receiving the money from the public, that will be taken into consideration. As far as concerned that the foreign company, the same things will apply. There is no any kind of change. But besides that, the another things which will be taken into consideration as far as concerned to granting a license to the company, those who are incorporated outside India, that is, they will see where that particular company was incorporated or has been incorporated. The India government will see that whether any kind of the policy which will have, it is not against, or you can say it is not completely the difference. And the second thing, he will ensure that if the company, those who are incorporated in India, if they are willing to do their banking business in that country, they are welcoming, or you can say permissible. So, in the one line we can say that with the help of the reciprocity relationship, any foreign company can be allowed to, or you can say the Reserve Bank will grant the license, subject to what? The subject will see that their law is not entirely, you can say, against the policy of our country, that has to be taken into consideration. At the same time, the section 22 is talking about if any time when the Reserve Bank or the Government of India, if you find that any banking company is not in a position to meet out which the subject matter which is laid down as far as concerned on the satisfaction of which the license has been granted, immediately that there is a provisions has been made under section 22 itself, that the license can be revoked, or you can say license can be cancelled. That provisions has been made under the section 22 itself. As far as concerned, as I have told you that okay, you obtained the license, now you have commenced the business, and as far as concerned that in other business if you will see that you are free to expand your business, you are free to carry out a business anywhere wherever you wish to do that. But as far as concerned that the banking business by choice or you can say by the willingness, it cannot be expanded. The reason behind it, at every time it will be checked by the Reserve Bank of India that by expanding business of any banking company, whether he is in a position to meet out the time and demand liabilities or not, that has to be checked. And by checking that, by conducting inspection, if he is satisfied that okay, the banking is in a right direction, so it is working, and it can discharge its liability which will arise in near future. So, when the Reserve Bank will satisfy, the Reserve Bank will grant permission for extending. And how the banking business is extending the business, that by opening a new branch. Only the one exemption is available here, that if in a locality, if in a particular locality, if any bank the branch is there, and if they wish within that locality to shift from one place to another place, that is permissible. For that there is no need or there is no requirement to take permission from the Reserve Bank of India. And the another exemptions which have been given under this act, suppose in a particular place if any the fair or you can say the long you can say the public engagement in any occasions is there, in that circumstances if their branches is existed, so to extend their service in that place where the melas and other things are going on, that can be managed, but that will not extend the period of 30 days. For 30 days it can be service can be extended, and for that purpose there is no requirement to get any kind of you can say the permission under section 23 of the act. In remaining cases, the section 23 very clearly mentioned that no banking company shall open a new place of business in India or change otherwise than within the same city, town or village the location of an existing place of business situated in India without obtaining the prior permission of the Reserve Bank of India. So, this empowered the Reserve Bank of India that without taking prior permission from the Reserve Bank of India, no banking company can expand or extend their business, barring the two exemptions which I have told you, that the existing branch within the city that can be shifted from one place to another part of that city, and the second thing is I have told you for the temporary period, that is 30 days if any melas and the occasion, subject to if your branch is situated in that place, so you can extend the services. As far as concerned, when we are talking about the banking services, even the banking company cannot open a new branch like to collecting a money or to collecting a check. There is no, every kind of you can say the activities that will come under the banking business, and it is prohibited as far as concerned the section 23 as far as concerned the expanding of its business without taking prior permission from the Reserve Bank of India. Now, how their accountability will be checked by the Reserve Bank of India? That suppose anyone, if someone is giving some assignment to any agency, and if that agency has not given power to check, then how he can ensure as far as concerned, or how he can mandate the accountability towards that agency. So, with that objective, there is a provision has been made under section 27 of the Act. The 27 empowers the Reserve Bank of India to collect information from every banking company, so that he can ensure that their business is going in a right direction, or in what condition or the circumstances that any you can say the order which has been passed for controlling or managing the affairs of the banking company, that is properly implemented, or accordingly the banking company is running its affairs. So, for that purpose, the section 27 of the Banking Regulations Act, it confer the power, and it says the section 27 of the Act imposes that every banking company should submit monthly returns to the Reserve Bank of India in the prescribed form and manner, showing its assets and liabilities in India as at the close of business on the last Friday of every month of, if that Friday is public holiday on the preceding working day. The Reserve Bank of India had the power to call For other returns and information if required, the banking companies are bound to submit every return and information which are required by the Reserve Bank of India to publish for such information in the public interest. As far as concerned, the Reserve Bank, as I have told you, that to monitor the day-to-day affairs of any banking company. So, with that objective, the section 27 imposes, you can say, the obligations towards every banking company, that every month they have to, the last Friday of every month, they will have to send their statement in a prescribed manner, and what they will show it, their assets and liabilities. On the basis of that, the Reserve Bank will understood that the affairs of the banking company is going in, or it is running in a proper manner, or there is no any kind of, you can say, the against or the detrimental to the interest of the depositors or against the banking policy. So, this is one of the means through which the Reserve Bank ensure that it's all right. The another sections which is talking about to collect informations and to ensure that suppose the data, or you can say the information which is submitted by the previous section, then under section 27, that only the prescribed manner is all right, but it was not authenticated. How? It is only that the person who is concerned, he is giving, but no, it is not easy that he will falsify, or there will be any kind of falsification, but there is chances for the authentication, and for that purpose the section 29 is very important, and that power has been conferred to the Reserve Bank of India again under the Banking Regulations Act, that accounts and balance sheet. Section 29 states that at the expiration of each calendar year, every banking company incorporated in India shall prepare with reference to that year a balance sheet and profit and loss account as on the last working day of the year in the form set out in the third schedule, and shall submit them to the Reserve Bank of India. As we know that every, not only the banking company, the other companies, they are also preparing a balance sheet, the profit and loss account, which indicates that what is the status of a particular company, because the balance sheet, it makes that how much assets he has and how much liability. So, it is a very important document which is prepared by the every company. So, under section 29 of the Banking Regulations Act, that it imposes the liability towards the banking company, and that it says that every banking company at the expiration of each calendar year, every banking company incorporated in India shall prepare with reference to that year a balance sheet and profit and loss account as on the last working day of the year in the forms set out in the third schedule, and shall submit them to the Reserve Bank of India. So, it is mandatory to submit a report that is in prescribed form by showing the balance sheet as well as the profit and loss account under section 29 of the Banking Regulations Act. Now, as you know that there is the documents, or you can say the accounts which has been prepared by any company, how it can be authenticated, for the purpose that we have a means or mechanism that to undergo through the audit. So, there is they will certify that the statement which has been prepared, or you can say the document which has been prepared by the concerned company, that is right. So, they will certify that. So, under section 30, see how relevance is that under 29 you will have to prepare the document. It is mandatory for the every banking company that they will have to prepare their profit and loss account as well as the balance sheet. At the same time, the section 30 of the Banking Regulations Act, it is talking about every banking should get audited its accounts periodically and shall submit the reports to the Reserve Bank of India. Every banking company shall, before appointing, reappointing or removing any auditor or auditors, obtain the previous approval of the Reserve Bank of India. But as far as concerned, the other banking company, they are also some sort of, you can say, the appointment of the auditors, that the liability lies under the Companies Act. But as far as concerned, that the banking company, apart from the Companies Act, that the Reserve Bank is also intervening, and the Reserve Bank is empowered under section 30 of the Banking Regulations Act 1949, and it empowers in how way that every bank should get audited its account periodically and shall submit the reports of the Reserve Bank of India
every banking company shall, before appointing, reappointing or removing any auditor or auditors, obtain the previous approval of the Reserve Bank of India. So, that means without taking, you can say, approval from the Reserve Bank of India, neither you can appoint nor you can remove any auditors, because that might be the chances that you will manage the auditors teams. So, that is why the Reserve Bank directly intervene as far as concerned. In other companies, the company, the registry will intervene, but not any other agency. But as far as concerned that they are also a part of the company. So, it is compulsion under the Act, they will have to comply the provisions of the Companies Act. But barring that, or besides that, we can say the section 30 which intervene as far as concerned the appointment, as far as concerned the removal or of any auditors, you cannot do that yourself, as in other cases it is possible or it is permissible. But as far as concerned that the banking company, they cannot, neither they cannot remove nor they can appoint or they can reappoint. For that purpose, if you are taking any kind of, you can say, the Act as far as concerned the appointing, removing or reappointing for the auditors, the prior approval is required from the Reserve Bank of India under section 30 of the Banking Regulations Act. As far as concerned that every bank should get audited its accounts periodically and shall submit the reports to the Reserve Bank of India. So, it is whatever the documents have been prepared, that has to be audited, and after getting audited, it must be deposited to the Reserve Bank of India. Submissions of returns after section 30, when we have seen that the powers has been conferred, or you can say it imposed by the Banking Regulations Act to the every banking company as far as concerned to prepare or to get audit all the documents which is prepared under section 29 of the Act. And further, section 30 of the Act, it is talking about the submission of returns. Under section 30 of the Act, the accounts and balances together with the auditor's report shall be published in the prescribed manner, and 3 copies thereof shall be furnished as returns to the Reserve Bank of India within 3 months from the end of the period to which they refer. So, again I am going to read out these provisions. As we have seen that to prepare the report, to prepare the balance sheet and the profit and loss account, and get audited from the auditors, and then it is section 31 is talking about that the accounts and balances together with the auditors' reports shall be published in the prescribed manner, and 3 copies thereof shall be furnished as returns to the Reserve Bank of India within 3 months from the end of the period to which they refer. For any period wherever the accounts is prepared and it is audited, that has to be published, and within 3 months that 3 copies should be submitted in terms of the returns before the Reserve Bank of India, and it mandates every banking company under section 31 of the Banking Regulations Act. As I have already told you that how the Reserve Bank will know that the affairs of the banking company is against, or you can say, the detrimental to the interest of the depositors. So, the Reserve Bank needs some sort of, you can say, the powers, and that powers has been conferred the Reserve Bank of India under section 35 of the Act. Section 35 plays a very significant role as far as concerned to monitor the banking affairs. So, they are the 2 words which have been incorporated under section 35 of the Act. One word is talking about the scrutinize, another one is talking about the inspection. Now, the scrutinize, when we are talking about, as far as the gravity, then we will find the scrutinize is the less gravity, as far as the inspection, that is you can say the gravity is little bit high. So, it depends on the Reserve Bank of India. The Reserve Bank of India at any time, there is no any kind of the foundations, at any time he can appoint the officials to conduct inspections or to conduct scrutinize, and that power has been conferred under section 35 of the Act. So, section 35 plays a very vital role as far as concerned to see the affairs, to check the affairs of any banking company, and that power has been conferred to the Reserve Bank of India through only the Banking Regulations Act 1949. It empowers the Reserve Bank of India to conduct inspection or to scrutinize, to conduct scrutiny. So, as per section 35 of the Act, the Reserve Bank of India had got the power to inspect the books and accounts of a banking company. After the inspection, it sends a copy of it to the concerned bank. When the Reserve Bank of India is inspecting a particular bank, every director, officer or employee of the bank is under an obligation to produce all the books, accounts and documents in his custody and furnish the information required. Any officer of the Reserve Bank of India who is making an inspection of the bank has the right to examine any director, officer or employee of the banking company under oath in relation to its business. The inspection by the Reserve Bank of India may be on its own or under the directions of the central government. In any case, it reports to the government on the inspections made under this section. If the central government opines that the affairs of the bank are conducted in a manner detriment to the interest of the depositors, it may give an opportunity to the bank to make a representation in connections with the inspection. If after such representation in connections with the inspection, that if after such representation the central government opines that it is reasonable, it may. The other two action can be taken. The first one is prohibits the bank from receiving fresh deposits. I will explain that. And the second one is, that is direct the Reserve Bank of India to apply section 38 of winding of the banks. The central government may publish the report of inspection if it thinks necessary after giving a reasonable notice to the bank. Now, let me explain this particular provisions. As I have told you that this is very important sections as far as concerned, the broad or wide power is conferred to the Reserve Bank of India. As I have told you, the Reserve Bank is a guardian, or in other way, you can say that we can use it as far as concerned to regulate the banking business. It's working as a watchdog. So, in every affairs, as I have told you that you cannot commence the banking business in India. So, that means without the obtaining or license from the Reserve Bank of India, you cannot open the banking business. When you are opening the banking business, at the time of opening, the Reserve Bank has the power that he can impose some sort of the limitation, the restrictions, and subject to that limitation restrictions, you will have to continue your business. That is the very important as far as concerned, that the power which has been conferred under section 22 of the Act. At the same time, we have seen that the bankers has no choice, or you can say the banking company has no choice to expand or extend their business. They will have to get the prior permission from the Reserve Bank of India for expansion or extending their business. And at the same time, as I have told you, that the Reserve Bank will again see that whether the bankers in a position by expanding or extending the business, whether he can meet out the needs of the you can say the liability which will arise, that can be meted out or not, that has to be checked by conducting the inspection or you can say scrutiny. And that's might be the reason that the power has been conferred under this particular section. This particular sections, when we are talking about that, at any time the word is used under section 35, and it is talking about that the banking company can be under the, you can say the scrutiny, or you can say inspections of the Reserve Bank of India. The Reserve Bank of India may appoint any officer for that purpose at any time, and he can assign either the scrutiny or for the conducting inspection. That can be done by the suo motu, or sometime that the directions may be given or issued by the central government on whatever may be that can be conducted. When the report is prepared, and the report will be sent to the central government, and if the central government find that no, the banking, the affairs is not going in a proper way, or it's not going in the right directions. So, in that circumstances, he may ask to the Reserve Bank of India to take the remedial, you can say, the action. What is the remedial actions? Then I have told you that the remedial actions, there are two forms that remedial actions can be taken by the Reserve Bank of India. But whenever the Reserve Bank of India will exercise that power, or you can say to take such kind of the remedial actions, at the time it's necessary that give or to apply the natural justice. That means give an opportunity to the concerned company that if and in what way they are representing, the representations is required. For the purpose of the representation, the opportunity has to be provided by the Reserve Bank of India. After receiving that the representations, if the Reserve Bank find that or the central government find whoever may be on which directions, or the Reserve Bank itself conducting any kind of, you can say, that he will send that report to the central government, and the central government may ask to the Reserve Bank of India to take these two remedial actions. The first one is prohibits the bank from receiving fresh deposits. We can understand that okay, the right now the company's positions is not good, but if we will stop to take the fresh deposit, then that might be it is in a come out from the crisis. If the Reserve Bank, or you can say the central government, feel like this, then the first remedial actions will be taken, that okay, stop the concerned company to take the fresh deposits from the public, because if you will continue to take, or the any banking company will continue to take the fresh deposits from the public, so naturally the liability will again the increase. So that's why the first remedial actions can be taken as that it not to allow to take the fresh deposit. And the second one is the winding up. The direct to the Reserve Bank of India to apply section 38 of the winding off of the banks. And as I have told you that the central government may publish the report of inspection if it thinks necessary after giving a reasonable notice to the bank. Now, the directions under section 35A that from the time to time the Reserve Bank, the powers conferred by under the Banking Regulations Act, that they can issue the directions to any banking company for the betterment or the improvement. So, according to section 35A capital A of the bank, the Reserve Bank of India may from time to time issue directions as it deems fit to a banking company in particular, or to the banking companies in general, and the banking company or companies shall be bound to comply with such direction. The Reserve Bank of India may of its own or on the representations made to it modify or cancel any of such directions, but in so cancelling or modifying, it may impose some other conditions subject to which the cancellations or modification shall have come to effect. Now, the section 35 empowers the Reserve Bank of India, 35A capital A, it empowers the Reserve Bank of India to issue directions. How? The generally for each and every banking company, or you find that there is a specific directions is required for a particular company. So, he can do that. When he is issuing that kind of directions, and the later on if I find that the directions can be taken back, or he will cancel it. So, for that purpose that the precautions has been taken, it says the Reserve Bank of India may of its own or on representation meant to it modify or cancel any of its directions, but in so cancelling or modifying, it may impose some other conditions subject to which the cancellations or modifications shall have effect. That means, it is talking about that okay, if suppose at that moment the Reserve Bank of India issue certain directions to a particular company, and the later on he find that it is very, you can say, the harsh kind of, you can say, the direction, give them some sort of the relief. So, he can modify or he can cancel that. But when he is cancelling or you can say the modifying, at that time he can put the additional, you can say, the restrictions towards or the directions towards the banking company, and that liberty or you can say privileges has been granted under section 35A to the Reserve Bank of India. Now, power to remove managerial and other persons from office, as in the previous I have told you, again there is section 35A, 36AA, the capital A. It says to control over management, section 36AA of the Act empowers the Reserve Bank of India to remove managerial and other persons from office of the banking companies whose conduct is detrimental to the interest of the deposits and to secure proper management. Section 36 AV of the Act empowers the Reserve Bank of India to appoint additional directors. Now, if the Reserve Bank come to the conclusion that if you find that the banking company is, you can say, the appears, it is against the, or you can say detrimental to the interest of the depositors. So, under section 36 AA, he can exercise that power that the persons who is influencing to taking such kind of decision, that persons can be removed, and at the same time to for the interest of the, you can say, the depositors, or for to secure the proper management, he can the Reserve Bank has a power to appoint the additional directors who will take care of it. Further, the section 47A capital A again of the Act, the Reserve Bank of India may impose penalty on such banking company, the banking company, those who are working in contravention of section 46 or the section 46 subsection 4, that the Reserve Bank has a power that the penalty can be exceed, and the penalty imposed, and the penalty is maximum, as far as concerned the contravention of the 46 subsection 4, it says not exceeding 5 lakh rupees or twice the amount involved in such contraventions or default, where such amount is quantifiable, whichever is more, and where such contravention or default is a continuing one, a further penalty which may extend to 25,000 rupees for every day after the first during which the contraventions or default continues. So, under section 46, the provisions has been made, the Reserve Bank has a power that he can impose penalty the persons those who are contravening or their act is against the provisions of this act. Now, at the last, that it is talking about the moratorium. When a banking company is temporarily unable to meet its obligations, it may apply to the High Court under section 37 of the Act and praying for an order staying commencement and continuance of all actions proceedings against it for a period not exceeding 6 months. An application is required to be accompanied by a report of the Reserve Bank of India indicating that in its opinion the banking company will be able to pay its debts if the application is granted. So, the moratorium reconstruction, the amalgamations of banking companies, the provisions has been made by under this Act. Further, the section 45 of the Act is talking about the central government may also declare moratorium in case where the Reserve Bank of India requests in its application to the central government for an order of moratorium in respect of the banking company to facilitate a scheme of reconstructions and amalgamation. So, on the way that the moratorium power is conferred to the central governments also. At the same time, the central government may grant moratorium for a fixed period of time on which such terms and conditions as it thinks fit. The period may be extended from time to time, but the total period of moratorium should not exceed 6 months. During the period of moratorium, the banking company cannot make any payment of any of its deposits or discharge any liability or obligations to any other creditors except to the extent provided by and directions given by the central government in the order for a specific purpose. The amalgamations is power has been conferred to under section 36 that the Reserve Bank can amalgamate the companies if they wish and if we find that there is a requirement. Suspension of the business that provisions or the winding of the banking company that has been provided under section 35 to 45, which deals about that the banking company is governed by the Banking Regulations Act and not by the Companies Act of 2013. Further, no proceedings under the companies can be taken against the banking company, and as the Reserve Bank of India factually control the banking company. At the end, just I would like to mention the one line that, as I have told you, that the ample power has been conferred to the Reserve Bank of India under the Banking Regulations Act. And it is my belief that if it will properly implemented, I don't think that what kind of, you can say, sometime when we find the Reserve Bank is not performing its work in a very proper way, or there are certain lacunae in the Act, we do not find such kind of things. The Act is drafted in a very beautifully, and if all these powers will be exercised by the Reserve Bank in a proper way, then we will find that the banking can be regulated in a proper manner and the depositors and the interest of the nations will be secured through the Banking Regulations Act. Thank you. Thank you very much.